All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Tuesday, everybody. Today is July 15th, 2025. Happy Inflation Day. We got CPI this morning. And look, before we get into CPI, I just got to mention there was a ton of financial news this morning. I did my best to triage this, but I had to cut a lot of stories, guys. This would have been an hour and a half long show if I really did everything I normally do. So we're going to go pretty fast today just to try to fit it all in there. Let's start with inflation. Inflation rose for the month of June, higher than we got back in May, although it rose roughly in line with expectations. And core inflation was actually, if you squint, it was just a little bit light. Let's throw the typical disclaimer in there. These are government BLS statistics and therefore subject to political manipulation as always, but it is the best data we have, and so we're going to report what we have. Headline CPI 2.7% year over year. That's versus 2.7% expected and up from 2.4. But don't worry, guys. The only things that saw like higher than normal inflation were, food, energy, and shelter. You know, the things that poor people spend all of their paycheck on. But other than that, prices look great. So ride that rocket. I don't know what to tell you guys. One thing that also stuck out at me, the shelter index still at 3.8%. I know a lot of folks, especially the guys in my Macro Edge group, they're probably freaking out this morning. A lot of people think that shelter index should be coming down faster than it really is. It's remained pretty stubbornly high. Food index still at 3%. Electricity has now risen roughly 1%, give or take, for 5 months in a row as data centers continue to gobble up electricity, leaving us to bid on what's left. Put a pin in that. We'll be back to that subject. And both new and used vehicles were negative. That's kind of odd considering auto tariffs, maybe affordability showing its ugly head, causing a decline in vehicle prices there. All right, so that's the inflation story. We also got big bank earnings came out this morning. They were mixed, or I should say the results, the movement of the stocks is mixed. I think largely these big bank earnings were pretty good, and we're seeing some consistent themes. That volatility in April caused by the tariff freakout and the subsequent rally after the taco move was very good for banks. Fixed income trading way up at most of the banks. Securities trading, stock trading way up at most of the banks. I did notice both JP Morgan and Wells Fargo posted a miss on their net interest income. That's a pretty important statistic for a bank, the difference in what you earn in interest on your loans versus what you pay out to your depositors. So that's something that's worth keeping an eye on when you have two big banks posting a miss on net interest income. That's worth keeping an eye on. Another thing that came out this morning, we've got BlackRock earnings, $12.5 trillion in assets under management at BlackRock now. Good God. Don't worry, it's all our money that they're managing, and they're plowing it into private credit. What's the worst thing that could happen? Don't answer that. Also going on this morning, Apple is investing $500 million into MP Materials. Now, you may remember that name because we were talking about that just a couple of days ago. That is the same MP Materials that the Department of Defense just took out a $400 million stake in. They bought 15% of the shares last week. I made the joke, government magnets, because MP Materials is the only producer of rare earths in the United States. And last week, we had the Department of Defense bought a whole bunch of stock. And more importantly, the Department of Defense put a floor under the price of the materials that they produce. And that floor was more than double the current market rate that most of the stuff coming from China is selling for. Apple took one look at that and said, sure, I'll take $400 million in that company if the government is going to guarantee a price that's double what it would sell for elsewhere. So we've got that one going on. That name is ripping again this morning. We've got a lot of AI and data center news also. Nvidia put out a blog post yesterday that said they were provided assurances from the government that permits for H20 sales to China will resume shortly. No definitives were given there, but keep in mind, Jensen Huang just had a big meeting with President Trump before he got on a plane to head over to meet with Xi Jinping's underlings in China at a conference there. And this is part of this ongoing back and forth between the US and China, where the Chinese were going to send us rare earths and we're going to lift some of the restrictions on AI technology being sold to them. So right now, it looks like Nvidia is the beneficiary of that. You may recall in their prior quarter, Nvidia took a $5 billion hit because the United States banned the sale of the H20 to the Chinese. Well, the government hasn't confirmed this story yet, but if this story is to be believed, it looks like those H20 sales will resume shortly. And we've got both Google and CoreWeave are both spending buku bucks to build more data centers in the Northeast, in particular in the PJM grid. That stands for Penn, Jersey, Maryland. It is the biggest electric grid in the U.S. It includes Northern Virginia, which is like the data center capital of the world now. In particular, Google is buying $3 billion worth of power or making billions of dollars investments in hydropower in Pennsylvania. I got to mention, guys, Pennsylvania, the PJM grid, that is a deregulated market. It's not supposed to work that way. Big power consumers are not supposed to come in and be able to buy up huge swaths of power at a discount, leaving retail electric customers to bid on whatever is left, driving their prices higher. It's not supposed to work that way. In a deregulated market, all the power is supposed to be sold into the grid, and everybody bids at the same time for the same power, and market rates prevail. What is happening with AI data centers in the PJM grid is illegal, and nobody is saying a freaking word about it because we all want our stock bubble to go up. And then look again at the CPI. In the last 5 months, that shows electricity prices in the United States rising almost 1% a month. You think maybe those two are related? Just maybe? Who knows? And last but not least, Bitcoin is getting clobbered this morning, absolutely crushed. We saw a hit or a high of 123,000 yesterday. The price went as low as 116,000 this morning. It's right around 117 now. WTF is going on there. It looks like a Satoshi era Bitcoin whale. Somebody who mined 80,000 Bitcoin back in like 2009 to 2011 timeframe. Well, he moved, the estimates vary wildly, but it looks like he moved some $4.6 billion worth of Bitcoin onto the exchanges. He sold $1 billion of it, $2 billion of it, depending on who you ask. This is a developing story, so I don't really know what the final numbers are. All I know is somebody with a metric ton of Bitcoin just sold a whole bunch of it, and it was enough to crash the price by several $1,000s. So we'll talk about that one as well. Guys, I told you we got a lot going on this morning. We are going to shrink my big melon of a head, and let's see what's going on in this market. And hey, don't forget that like button for the YouTube algorithm. And if you're new here, hit that subscribe button as well, because we do this every morning. So come back and have your coffee with the melon heads as we go through markets. And the S&P right now is up 26 points or 0.43%. I would point out, guys, right about here, this green candle, this was the CPI. The market did initially react pretty favorably, gave back some of that. Honestly, the market didn't really care about the CPI. Inflation slightly, ever so slightly below expectations in core. Okay, that's optimistic, but the odds of a July rate hike are now virtually gone. Or I'm sorry, a rate cut. Probably not going to happen now, not without a higher inflation reading. So it looks like there's some things to celebrate and some things to not celebrate in this CPI. The Dow, meanwhile, is down 15 points or 0.03% lower. Again, big reaction to that CPI, or a modest reaction to the CPI, and then it just kind of gave it all back. And the NASDAQ is leading the way lower, leading the way higher, 169 points to the upside, or about 0.75%. This is being largely driven by the big tech names and Nvidia, which is up several percent on that news of the H20 possibly being sold to China. Looking over at the DXY, we have got a slightly weaker dollar, but you'll notice we're back above 98.07 for the DXY. That is lower by 5 basis points this morning. And looking over at the bond market, we've got a mixed bag in bonds here. The 30-year Treasury, 4.938. That's down by about 3.5 basis points. The 10 years at 4.412. That's off by almost 2 points. The 2 years at 3.908. That's higher by 1 point. And the 1 month is lower by a point and change at 4.313. Not a lot happening in bonds this morning. Just want to mention, guys, the Japanese bond market. We had talked about that one yesterday. Again, we got a lot of news today, so we had to cut some stories. But we saw that Japanese 40-year yield go sharply higher last night, and then it reversed and came down. I don't know if the finance ministry or the Bank of Japan intervened in the Japanese bond market last night. Just know that that big move we talked about yesterday morning was continuing, and it reversed very suddenly. So keep your ears open for more news about Japanese bond market intervention. Looking over at the commodities board, looks like we got a little bit of red, a little bit of green here. Spot gold, $3,346. That's higher by about $2 or $3 this morning, or 0.1% higher. Gold did reverse a little bit yesterday, and silver as well. We've got spot silver is at $38.20. It's actually higher by 6 cents, now 7 cents, or about 0.19%. Now, silver reversed yesterday. The price sold off a little bit. Another thing I want to point out here, guys, is look at the September silver future here. That's at $38.56. That's actually down 18 cents, while spot silver is higher by 10%. So we're starting to see that EFP premium start to compress a little bit here. That big gap that opened up late last week is now closing. Meanwhile, copper is at $5.55. That's higher by basically insignificant amount, 0.02% higher for copper. Platinum is up by 1.1%, $1,433 for October platinum futures. Palladium is higher by almost 2%, $12.65 for September palladium futures. And WTI crude oil largely unchanged. That's down about 0.1%, $66.91 for those August WTI futures. Now take a look at Bitcoin. Rough morning for Bitcoin here. These are daily candles that we're looking at. Currently $117,993 as priced on Coinbase. We are down about $6,000, maybe $5,000 from our highs yesterday. I just want to change this. Let's set this to 1 minute candles so you can kind of see what happened over the last couple of hours here. You can see it was a really rough overnight session as that Bitcoin whale was moving his Bitcoin on the Galaxy Digital. We saw Bitcoin sell off as low as 116,400, it looks like, was the intraday low. Now we're back up pushing 118,000. So let's talk a little bit about this Bitcoin whale. Satoshi era whale moves $4.6 billion in Bitcoin after a 14-year hodl. The mysterious whale may be looking to cash out the transferred Bitcoin. A Satoshi era Bitcoin whale has reawakened after 14 years of dormancy, potentially looking to sell more than $4 billion worth of Bitcoin. The major cryptocurrency holder has 80,000 Bitcoin in their stash. Poor guy. The whale transferred 40,010 Bitcoin worth over $4.6 billion on Monday, of which 28,600 were subsequently transferred to Galaxy Digital. Data from blockchain intelligence platform Nansen shows. And one wonders, he was going to send 40,000 Bitcoin, but he ended up sending 40,010 Bitcoin. It's that extra 10 that really puts you over the edge there, huh? On Tuesday, a remaining 10,200 Bitcoin worth $1.2 billion was transferred to Galaxy Digital, bringing the total value moved in the past 2 days to $4.6 billion at the time of writing. According to on-chain analyst Ember CN, these movements to Galaxy Digital may signal that the whale intends to offload a significant chunk of their stash. Now, I was looking, there's a lot of articles about this, and the numbers vary wildly from 1 billion to 4.6 billion. It looks like he actually sold at least 1 billion of it. I haven't been able to nail down exactly how much specifically he sold, but just that he moved 4.6 billion of it. This is a guy, one of the original Bitcoin miners. He's sitting on a stash worth over 9 billion, and he started moving about half of it. Now, I have to ask here, I have to wonder, if you are one of these whales and you own enough Bitcoin to crash the market, if it's your goal to cash out, this makes no sense. All right. So moving all this Bitcoin all at once and then dumping it in one huge block trade, that's one way. If you want prices to go lower, well, that's one way to get them. Now, if you're just trying to cash out and make as much money as possible, you try to make these trades very slowly, spread out across several weeks. You do it in little increments so you don't crash the price and the market can absorb it. So what this Bitcoin whale did was he crashed the price on purpose. Why did he do that? anybody's guess. Maybe he wants to buy it all back. Maybe he's in trouble. Maybe he's buying some other business. Only this whale knows. Nobody knows who he is. But you got one guy crashing the price of Bitcoin. It's one of those early adopters who just has a huge stash. Something to keep an eye on. It's why I always remind you guys, be careful on leverage. All right, let's talk about inflation here. United States inflation rate, 2.7% year over year. There's your June number. You notice that is higher than the 2.4% that we had in May. So inflation is rising. Now let's look at the month over month number. This is the headline number month over month. That was up 0.3%, also higher than the 0.1% we got in May. So either way you look at it, headline inflation is going up. By the way, this chart of year over year inflation, let's zoom that out 3 years. You guys let me know, does this look like inflation is moving sustainably towards our 2% target? We have not hit 2.0% once. Not since this whole ridiculous COVID mess started have we hit 2%, even though all these muckety mucks at the Federal Reserve and their flashy new headquarters, they're all congratulating themselves on doing such a wonderful job. We haven't hit 2% once yet. Meanwhile, looking at core inflation, which strips out volatile food inflation, that came in at 2.9% year over year. So this is one of the, I guess you could say, slightly lower than expected. The market was expecting 3.0%. We ended up with 2.9. All right, so a little bit below expectations for core, albeit higher than the 2.8% year over year that we had for the month of May. And I would just point out the month over month core inflation rate, that rose as well to 0.2%. Now, the market was expecting 0.3. It actually came in at like 0.23. So we were a couple of points shy of rounding up there. But again, on a month over month basis, slightly lower than expected, but slightly higher than the 0.1% we had in May. Now, let's look at the chart, see where the inflation actually was. Here you can see your headline 2.7% year over year number. There's your 0.3% month over month. We've got food inflation, 3% for the year and 0.3% for the month. It's still getting more expensive to eat. That is both food at home and food away from home getting more expensive. So restaurants and grocery stores. Again, the things that poor people spend most of their paycheck on are still going up much faster than the Fed's arbitrary 2.8% target. The energy index was up 0.9% for the month, although it was negative 0.8%. The biggest driver of that negative energy reading year over year was gasoline, down 8.3% for the year, but higher 1% for the month. Now, the other thing I want to point out in the energy index is electricity. Look at these electricity numbers going all the way back to February. First of all, 5.8% year over year. That's a pretty big jump for electricity. That is something that hits the working class because their electric bills going sharply higher there. But you'll notice ever since February, 1%, 0.9, 0.8, 0.9, 1%. Electricity prices month over month have risen roughly 1% every month since February. That is your AI data centers gobbling up all the power on the market, driving electric bills higher for everybody. You're going to see higher electric bills if they don't do something about this reckless data center build out, simultaneously denying the construction of pipelines and power plants all over the country. Something's got to give in power markets here, and you'll see later on in the show why that's so important. Now, another thing that stuck out at me as pretty important here is new and used vehicles, both of them. Let's look at those categories here. So first off, new vehicles, 2 months in a row of negative price movement, negative 0.3%, 2 months in a row. Guys, those auto tariffs have been implemented. We tacoed on the headline reciprocal tariffs, right? Those went away, but that 20% tariff on autos, that is hitting, and we've seen new vehicles actually get cheaper. People just can't afford cars. On a year-over-year basis, they were up 0.2%. Now, for used cars and trucks, the move was even bigger. 4 consecutive months now of negative reads in the used car market, 0.7% for the month of June, but still a 2.8% year-over-year increase. We're going to see that number start to swing negative very soon here in subsequent months. Other things that stuck out here, shelter, 3.8%, still pretty high. Shelter is the biggest contributor to the overall index. Owner's equivalent rent accounts for about a quarter of the entire CPI math. That one was down at 0.2% month over month, but still a big contributor here. Probably more than half of the CPI increase was due just to that one statistic. So overall, inflation higher than last month, slightly, ever so slightly below expectations. Now let's talk about bank earnings, because we got a ton of bank earnings this morning. JP Morgan's surprise deal-making gains signal tariff fears easing. JP Morgan's investment bankers eked out a surprise gain in the second quarter, signaling what may be the start of a deal-making rebound after widespread hesitation tied to U.S. tariff policies. Investment banking fees climbed 7%, the bank said in a statement Tuesday, while analysts were expecting a 14% decline. The firm's stock traders notched their best second quarter ever, and fixed income trading trounced expectations. Guys, that is all about the volatility in April from that tariff freak out. These guys collect fees when people trade. There was a ton of trading in both directions between April and May. JP Morgan made stupid bank on that. Deal-making activity started to slow but gained momentum as market sentiment improved, CEO Jamie Dimon said. And somebody needs to explain to Jamie Dimon how momentum works. Back to physics class with you, because you can't slow and gain momentum at the same time, not unless you're getting bigger and fatter. Maybe, I guess that's possible now that I think about it. Either way, not really how momentum works, Jamie. One other thing I want to point out, JP Morgan added $439 million to its pile of money set aside for potentially soured loans, although that was less than the $761 million analysts expected. Investors are also keen for insight into how executives are thinking about capital, with a Federal Reserve conference on the topic slated for later this month. JP Morgan and its peers sailed through a relaxed version of the Fed's annual stress test last month, and days later, the bank boosted its dividend and announced its largest buyback program ever. JP Morgan stock doing all right this morning. It's up about 0.5%, $289.93. It was initially a little bit lower this morning, but now it seems it has caught a bid. Let's refresh this, higher by about 0.5%. Meanwhile, Wells Fargo misses net interest income estimates and cuts their guidance. Wells Fargo lowered its full-year guidance for net interest income after another quarter of tepid growth amid the ongoing trade war. The San Francisco-based lender posted $11.7 billion in net interest income. That's income from lending minus the cost of deposits for the 3 months through June, falling just short of analyst estimates of $11.8 billion. That net interest income is arguably the single most important statistic in bank earnings. Wells Fargo missed on that one, as did JP Morgan, by the way. That prompted Wells Fargo to lower its full-year net interest income growth target to little change from last year, down from the prior guidance of 1% to 3% growth, driven by lower net interest income in the bank's markets business. Investors have monitored the guidance closely because the economic outlook has been clouded by President Trump's tariffs. Wells Fargo saw a 6% decline in net interest income in the first quarter, raising questions about its ability to reach its original target. But still, its credit quality remains sturdy, with net charge-offs dropping 23% from a year earlier. Provisions for credit losses came in at $1 billion, lower than analyst projections for $1.16 billion. So that's both of those banks now posting lower provisions for credit losses. Wells Fargo stock, though, not doing so good on that lower net interest income. They are down 3% this morning, trading at $80.85. Although year-to-date, the bank is still up about 18.8%, largely because of the relaxed capital restrictions that just ticked off, stemming from that fake account scandal from years ago. And we had another bank. We had Citigroup posted also. Their traders post a bumper haul on Trump's tariff upheaval. Another bank making a lot of money on all of that tariff-induced volatility. Citigroup's traders rode the tariff-induced volatility in markets to their best second quarter in 5 years, with revenue buoyed by record trading volumes in the quarter. Revenue from the bank's fixed income trading business soared 20% to $4.3 billion. That's beating the $3.9 billion predicted by analysts in a Bloomberg survey. Citigroup stock traders hauled in $1.6 billion, also surpassing expectations, aided by a surge in prime balances to record levels during the period. Citigroup had previously warned investors that it would need to put aside hundreds of millions of dollars more than it did last quarter to account for potential losses on loans. While credit costs in the quarter rose 16% to $2.87 billion, that was below the $2.94 billion analysts were anticipating. So that was bad news, but not as bad as expected. So therefore, good news. Are you still with me on that? I guess. There were other bright spots in the period, which saw all 5 of Citigroup's businesses post revenue gains. For the firm's services, wealth, and U.S. personal banking businesses, it was their best second quarter ever, and total net income jumped 25% in the period to $4 billion. Citigroup having a good morning. Let's refresh this one. $88.75 for Citigroup shares. They are higher by 1.2%, or about $1 higher. Meanwhile, BlackRock just continues to get bigger. BlackRock's assets surge past $12 trillion. They actually hit $12.5 trillion in the last quarter. BlackRock has become the world's first $12 trillion money manager. The investment firm's assets rose to a record $12.53 trillion in the second quarter, buoyed by record high U.S. stock prices and $68 billion of net client inflows. That's up 18% from a year ago. Net income rose 6.5% to $1.59 billion from $1.5 billion a year earlier period. Excluding certain one-time expenses, BlackRock earned $12.05 a share in the most recent quarter. On that basis, the company profit beat the analysts' estimates of $10.78 or $10.78 as polled by FactSet. BlackRock's fee revenue is growing in part due to a major push into private market assets. The money manager closed its acquisition of private credit firm HPS Investment Partners on July 1st, just after the end of the quarter. And that paragraph should probably scare you at least a little bit. BlackRock, not a bank. All right, that's important to remember. BlackRock is not a bank. They might have $12.5 trillion of your money, but they are not a bank. And therefore, they're allowed to loan that $12.5 trillion to anybody they want to. And right now, they're loaning it to people who can't borrow money from banks because the government won't let them because it's too risky. Do you see where I'm going with this? That is freaking scary. BlackRock, the textbook definition of too big to fail, even though it's not a bank. They're putting all this money into private credit, which is where money goes to die, but I'm sure that's going to work out great for everybody. BlackRock stock, the opening bell has rung. It is down 3.7% this morning. I guess you had a little bit more optimism was built into these shares than they got. $1,065.88 for BlackRock shares. Also going on this morning, Apple will invest $500 million in rare earths mine operator MP Materials. Fox Business reports that is the second big investment in MP Materials in a week. Apple is expected to announce $500 million commitment to MP Materials, the operator of the only U.S. rare earths mine, Fox Business reported Tuesday, citing multiple sources familiar with the deal. Apple and MP did not immediately respond to Reuters' request for comment. MP agreed to a multi-billion-dollar deal last week with the U.S. government to boost output of rare earth magnets and help loosen China's grip on the materials used to build weapons, electric vehicles, and many electronics. The Fox Business report said the agreement includes plans for Apple to purchase U.S.-made rare earth magnets from MP Materials' Texas facility. MP already produces mined and processed rare earths and has said it expects to start commercial magnet production at its Texas facility around the end of this year. Fox Business also said the two companies will build another factory in Fort Worth, Texas, to produce magnets and a new recycling facility in Mountain Pass, California. Last week's deal with the U.S. Department of Defense includes a price floor for rare earths designed to spur investment in domestic mines and processing plants, which has been lagging partly due to low prices set in China. The DoD price guarantee for the two most popular rare earths was set at nearly twice the current market level. And go figure, it's easy to make a profit and to get new investors when the government comes in and doubles the price of what you're selling your stuff for. Turns out that's very good for business. A shocking turn of events. MP Material stock is ripping this morning. That stock, let's let it refresh here, up 14.7%, $55 and $56.31 on this news. By the way, year to date, this stock is up now 256%. Big chunk of that coming. You see this gap up here. That was that DoD announcement last week. Now a big gap up again on that announcement from Apple. And we got a couple we have to breeze through here, guys. Nvidia says it will resume H20 AI sales to China soon following U.S. government assurances. We're a little short on time here, so let me just blow through this. We haven't heard from the government that they're going to approve this. Nvidia put out a blog post on the company website yesterday that said they had received assurances from the government that these permits to sell the H20 will be approved soon. So some wishy-washy language here. The government has not yet confirmed this. I'm assuming, though, that Nvidia wouldn't come out and say this if the government hadn't already provided some kind of guarantee. Now, I would point out that Nvidia took a $5 billion charge in their last quarter because of all of the useless H20 inventory that they had built in hopes of selling it to China. And then the government came out and said, no, you can't sell it to China without a permit, and we're not going to give you the permit. Well, now it looks like they're going to get the permit, which means maybe that $5 billion is coming back. Either way, Nvidia stock is ripping on this news this morning. Now, Nvidia stock is also higher on this news from Google, who will invest $25 billion in data centers and AI infrastructure across the largest U.S. electrical grid. Alphabet's Google will invest $25 billion in data center and AI infrastructure over the next 2 years in states across the biggest electrical grid in the U.S., the technology company said Tuesday. Google will also spend $3 billion to modernize 2 hydropower plants in Pennsylvania to meet the growing power demand from data centers and AI in the region, according to the company. The refurbishment of the Pennsylvania plants is part of a broader framework agreement that Google signed with Brookfield Asset Management to purchase 3,000 megawatts of hydroelectric power across the U.S. That is 3,000 megawatts of power that will not be going to homes or small businesses. Google cut a side deal. They get to power. You guys are just going to have to bid on whatever's left. Sorry, and may the odds be ever in your favor. Google's investments in the region come as the PJM interconnection is struggling to keep up with rising electricity demand from data centers and industry. PJM is the biggest electrical grid in the nation, covering 13 states across the Mid-Atlantic and parts of the Midwest and the South. It includes the world's largest data center market in Northern Virginia. So when you see stories about this, you kind of wonder, why is electricity going up roughly 1% a month for 5 months in a row in the CPI? Well, gee, you think maybe these two stories might be related? Just maybe. But wait, there's more. My favorite company in the whole wide world, CoreWeave, commits $6 billion to Pennsylvania data center amid Trump AI push. CoreWeave's investment, where are we? Here we CoreWeave plans to spend up to $6 billion, that they don't have, by the way, on building new artificial intelligence data centers in Pennsylvania as part of a push by U.S. President Trump to maintain the country's edge in the booming tech sector, the company said on Tuesday. CoreWeave investment adds to the hundreds of billions of dollars companies have committed to expanding AI infrastructure in the U.S. amid growing energy and computational demands and Trump's drive to onshore AI supply chains. The announcement will be made during a CEO roundtable with Trump at Senator Dave McCormick's inaugural Pennsylvania Energy and Innovation Summit, the company said in a statement. The demand for the data center will initially use 100 megawatts of power with potential to expand to 300 megawatts. And by the way, guys, CoreWeave is a notoriously cash-burning inferno. And so where are they going to get the $6 billion? The same place they're getting the, $19 billion or whatever they're spending to buy Core Scientific. They're going to borrow more money and they're going to issue more shares. So CoreWeave stock is up even higher on this news until people realize where that money is going to come from. And they're going to realize, oh, wait, they're diluting me. That's where they're going to get their $6 billion. But as always, may the odds be ever in your favor. Oh, it's one of those mornings, guys. And I just want to say thank you very much to Learcy for the super sticker. Learcy, you know him. I can't see what the sticker is showing. Oh, it's a banana. They don't show up on StreamYard. But thank you, Learcy, for supporting the channel. Appreciate that very much. And Pigo's Trading Desk, thank you. He says the race for Skynet. If anybody builds Skynet, it's probably going to be Anduril. They're spending a lot of money on autonomous drones and AI. But yeah, I mean, the one thing that's not being said, and I do get this comment a lot, the reason why the government is turning a blind eye to so much fraud and financial BS is because the military wants this technology. I think that's pretty obvious at this point. It's why we don't want the Chinese to get it. But at the same time, the Chinese are getting it. See also DeepSeek. And remember, everybody was like, oh, yeah, everyone knows DeepSeek has 50,000 H100 GPUs. Wait, what? They're not supposed to have him. And nobody said anything about that. Nobody did anything about that because at the end of the day, they also want their stock bubble to stay inflated. Maybe that's got something to do with that H-20 permit that may or may not be getting issued by the government. We still haven't had confirmation of that. But thank you very much, Pigo, for supporting the channel, sir. I appreciate that very much. Guys, I told you there was a lot of news today, and I know we had to go pretty fast through that. So I apologize for ripping through that news. There was a couple other stories that got cut. If we have a slow day tomorrow, maybe I'll throw those in there. Yeah, it's just one of those days. Thank you very much, everybody, for having your coffee with the Melonheads this morning. I appreciate that very much. Thank you guys for the super chats, as well as you, my magnanimous Melonheads on Patreon and YouTube. You guys rock. Links down below, should you feel so inclined. Don't forget that like button and that subscribe button on the way out for the YouTube algorithm. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.